All you need is one profitable setup in order to make money trading. And inside of this video, we'll be going over a very simple setup to make $500. We'll look at precise entry and exit criteria so that you're just not entering and exiting the market anywhere. We'll look at the exact time of day to trade so that when to get in and also when to get out. And lastly, we will look at real trade examples and more so that overall you can execute this model with confidence and make money trading. But before that, let me give you guys a little bit of background into who I am. So, my name is Chris. I am a trader. I've been trading for a good 3 years now. So, this photo was taken back inside of 2023. This is when I was working at an Amazon warehouse. And back in this day, the reason I pulled up this photo, because back here, I just literally wanted to become profitable. I was working this job. I was getting different prop firm accounts. I'll get a 10K account, a 50K account, and I'd blow up the account before even being able to get a single penny back, even to get a simple payout. Back then specifically, I just wanted a way to become profitable because I had already been trading for a good year. I knew strategies, I knew fundamentals, I knew a little bit about the markets, but I couldn't just find a way to make it click. I knew that trading worked. I saw it working for other people, but I hadn't made money at all from trading, and it had already been a year. So I was buying multiple accounts, doing a whole bunch of things, and it just was not working for me. And this one, I was working at Amazon, I was sad. I wasn't feeling good about myself just because I had bought all these accounts and I was still not making any money from trading. So fast forward to now, I made a simple switch inside of my trading that made me pass these challenges and see what you see up here, making my first 500 by doing a simple switch that I'm about to show you guys inside of this video. So what is the strategy that I am talking about? The strategy is basically focusing on liquidity. So we are going to focus on time, what I like to call time-based liquidity. This is what changed everything for me, that took me from an unprofitable trader, not really making much, to becoming profitable and being more consistent inside of the markets. So what do I mean by time-based liquidity? The market, let me erase all this. A lot of traders don't really understand that. Let me erase this real quick. A lot of traders don't, while I'm erasing this, a lot of traders don't really understand how the market actually moves. So before I go over it a little bit more, you first have to understand how the market moves. So if you probably just look at a chart, you see uptrends and you see downtrends. But what is the market actually moving to? It's moving from an area of interest to another area of interest, because there are buyers and sellers inside of every single market. So the market is moving from buyers to other sellers and vice versa. That's all we're doing every single day. That's why it's called trading, because these buyers and these sellers are trading prices back and forth all day, every single day. Of course, they're not like physically, you don't have to physically be sitting at a desk, because now we have robots doing it for us. But the main thing is like these buyers and sellers are exchanging these prices during all day. So this forms liquidity, because all liquidity is just wait, this came back. Let me erase this again. All liquidity means is transferring an asset into cash. That's all it really means if you look up the definition of liquidity. But in the markets, we see liquidity as an area that price has to tap into for it to get fuel. Let's say that this is a level. The market has to tap into this fuel before then it can move inside of the direction that it wants to. See, a lot of traders, they make the mistake of trading anywhere and at any time inside of the markets. Even with once they understand liquidity. They'll still trade at any time and any places, but when you mark off specific, when you get specific about it, you see specific areas that are getting tapped into, that's when you start to gain that profitability. But anyways, let me reel it back. So time-based liquidity. So when we think about liquidity, just like how I explained it, we want to mark off areas that we know for sure, or more than not, most days that price is going to tap into, so that it can get that fuel, so that it can move in the direction that it actually wanted to. One of the ways that I did this and that I found was very profitable for me, just by showing up and looking at price action every single day, was session-based liquidity. So what do I mean by session-based liquidity? We have 3 sessions every single day. We have Asia, we have London, and then we have New York. These are the 3 sessions that we have every single day. And at the highs and lows of each one of these sessions, there is an area of liquidity. There's a pool of participants, because the theory is during these sessions, there are participants who set their stop losses right above the highs and the lows of that specific session. So during Asia, you might see somebody, during Asia, you'll see that there are above the high and also the lows. And in London, you might see that price above Asia high, Asia low, and then moves inside of the direction that it already wanted to go in inside of the first place. So that's all I mean, time-based liquidity. Another important factor of this that I get into as the problem is that traders don't focus on specific times to trade, is that you will see that this happens during the first hour or two during a session opening. You will see that price will mark off Asia high low, and during London, price will take out that liquidity so that it can move in the direction that it already wanted to go in. Because all liquidity is just fuel for the market, just fuel for people, so that price can move in the area or the direction that it already wanted to go in. Learning this for me was huge, because once I could identify something specific that more times than not inside the markets, that is what changed from a strategy perspective of my consistency inside of the markets. So now I'm just going to go over a couple of examples of this on the live charts for you guys, just so you guys can see. So I'm going to be out here on gold, and we're just going to keep it raw. We're going to go over a couple of, I haven't traded gold too much this month, just because I like to be like super, model is so super specific. And if you guys want a free training on my model, you can go in the description. It's a very specific model. You'll get a free training on it, and you'll see exactly how I trade like today. That includes time-based liquidity. So anyways though, look at every single day on this chart. So the first indication of this happening, just so you guys don't know that like just yapping, we have Asia right here in the white. This white part is Asia. This yellow part is London. And then this orange part is New York. So just like I said, with the liquidity, we want to focus on the highs and lows of every specific session. So let me get this out the way so that you guys can see. So in London, we mark off the high and the lows, and then we also have the highs and lows of Asia. And then on this day, what do we specifically see happen? Like here, we see a sweep right below where London low and also Asia low. What does price then do? We reject, and then we go higher. Simple, simple. And this is just one day that this happened. Let me go to another day. This also happened today, but also a better example of this happening. I really like trading gold, so I'm just looking at examples on gold. This other day was on London, where we had the same occurrence happen. We had a sweep of Asia low, literally right here, and then what do we do next? We go higher for the rest of the day. We swept out all of these people right here. We swept out the lows, and then we move higher for the rest of the day. Let me go to another example for you guys. Here, this is another day. This is Tuesday. This is like another for you guys, where we see that this is New York, but this is kind of like the opposite. We weren't buying on this day, we were like more so. So we mark off the highs and lows of London, and then during New York, what do we get? We get a sweep right above the high of London, and then we just see that continuation for the rest of the day. So one thing we also want to realize too is that we want to wait. So once we sweep out a high or a low, we want to leave that. Like, for example, let's say that instead of going up first during New York, we went down and then we went up. For me personally, I wouldn't take that trade just because we've already taken out London low liquidity. Once we take out an area of liquidity, in my mind, those buyers or sellers have already been tapped to inside that trade, and I'm going to leave the trade alone. But let me go to another example for you guys. This is actually a trade that I took. I've only taken 3 trades this month. This was one of the winning trades where we saw a sweep, like I'm just saying, right London low. We then tap into an area of interest, and then we start going higher for the rest of the day. Yeah. So that is basically for this video. This was just like, a quick video, simple, that made me my first $500 trading, and realizing it is what brought me consistent profits. If you guys want a free training on this, simple topic, you can link down in the description and it'll take you right to it. So that's it for this video, and I'll see you guys next time.